Hi, my name is Paul Fullerman with DG Perry CPAs and Advisors. I'm a CPA and partner in our Dublin, Ohio office, and I want to introduce you to my partner, Jason Monroe.
Hi, Jason Monroe, CPA, also in the Dublin office with DG Perry. Happy to go over some tax tips with you here today.
So Jason, we get questions all the time from realtors. Do you have any tips or tricks that people can use during the year to get ready?
Sure, I think the biggest thing we see is just staying organized is a really important concept. Separating business and personal expenses is really important. If you keep that segregation, you're not going to lose any of your business deduction. Definitely don't want to miss out on reporting those.
What are some examples of deductions that realtors specifically or brokers could use to keep track of during the year to lower their taxable income?
Sure, a couple of good ideas certainly are vehicle deductions, keeping track of your mileage throughout the year. Ultimately, you can have a home office deduction if you're using your space exclusively for business use. In addition, things like business use of your cell phone, dues, signage, other costs you might have at a showing or meeting clients are some examples.
And one thing I think that gets overlooked is estimated payments. A lot of times we get clients that don't make estimated payments, or they think they have to do them all at the same time or the same amount. Can you give some insight into how and when you would pay estimates?
Sure. Generally, if you're self-employed, you're going to want to be making quarterly estimated payments. Now, the amounts can vary by quarter. It's important to probably have your own tax advisor and have those discussions with them about the appropriate amounts. The idea is that we don't want any surprises come tax time. In addition, that's going to help you cash flow for the rest of the year and making sure that you're paid in by April 15th.
The key there is to limit penalties, interest, pay estimates when you can, but that's definitely something that you want to talk to a tax advisor about. So Jason, outside of just business expenses and certain things like that, what else can realtors or brokers do to have a big impact on their taxes?
Sure, things like health insurance costs can lower your overall taxable income. In addition, things like retirement planning. If you want to put money into retirement plans, that is also going to lower your overall taxable income and should be factored into things like thinking about your quarterly estimates and so forth and your overall annual tax plan. Overall, if there are some key takeaways, being organized is going to be really key to making sure that you're paying the right amount of tax. Staying on top of this and not letting it get behind is also really important with your estimates. The last thing anybody wants is a surprise come tax time.
Thanks to the Ohio Realtors for inviting us to give you guys some tax tips and saving strategies. Again, I'm Paul Fullerman with DG Perry.
Thanks again to Ohio Realtors for having us. I'm Jason Monroe with DG Perry. Feel free to reach out to either of us if we can be of assistance and provide you any more professional guidance.